Hi, Tarun. Thanks for joining us on my podcast today. I was hoping to get a buyer's agent on board because, as you know, and we'll discuss it later on, but as you're aware, there are some sort of big announcements or some big news in the property space. So, especially for first-time buyers. But we won't talk about that now. I think I want people to understand what you do, where you come from, what's your background. Tell us a little bit about what you do.
Sure. Thanks, Keaton, for inviting me here. My name is Tarun. I'm a buyer's agent slash property strategist at EquityWise. I buy and help people across Australia to build their property portfolio. I have a team on ground in different states, in Queensland, Victoria, to name a few. My target is to build wealth for people using property.
Yeah, nice, awesome. And I imagine different people have, one thing we talk about on like this channel and as well as on my other videos you've probably seen, is that everyone has a different strategy. And I think there's a lot of people out there that sort of go to a lot of these one size fits all type programs or strategies that they've learned from someone else, and they try to replicate that. But that's not what you do, right? You sort of sit down with the client and discuss their own personal strategy.
Definitely, yeah. So we start. There is a 10-step process to it. We start with discovery session, which is more like a introductory session with our client, just to understand their requirements, what they are after, what kind of property types they prefer, or what kind of city or location they are comfortable in. Based on their requirement, we do our education from our side as well. That look, based on your requirement, this might be a good location for you, or this might be a good state for you to buy in. Then comes the strategy session, which is, as you mentioned, because not every person is similar, not every strategy fits everyone else. You can be in a different situation. You're looking for a cash flow, or you're looking for a capital growth, or maybe a balanced out of two. So based on that, the strategy is very much important for us. Based on that strategy session, we create a buyer brief. And once the buyer brief is created, I provide that buyer brief to my local acquisition team member, and that's when they start buying. So they'll have I would say, a bullet point kind of a checklist wherein they can actually tick the boxes if they find a property, and that's when we present it to the buyers. It makes our process really streamlined and easy once we are on ground and finalizing the property, rather than just spending 2-3 months. It makes around like 2-3 weeks kind of a thing. Yeah, so you don't miss on the cycle, and then you don't pay an overpriced thing.
Now, I have noticed you're talking about different strategies and everyone's got the different one. I've noticed that there has been a big move to paying off your own occupied property, and people actually looking to invest in order to do that. In fact, we were chatting to one of our clients just the other day about how, they're looking at sort of the capital growth on their property over the next 10 years. So they can actually sell that property and then pay off their own occupied property. Their goal was not so much sort of a big wealth creation by multiple investment properties. Their goal was just to pay off their own occupied property.
Right.
And you can actually do that through investing, right?
That's right. So yeah, that's called rentvesting, as I suggest to a few of my clients in past as well. If you're not able to buy anything now in your own city or in your own location, but you still wanted to enter the market, go for the rentvesting strategy, which helps you create wealth. So you're not out of the market, you're in the market with the inflation thing. And that's when you build the equity, pull out the equity, and maybe start buying it as an owner occupier. Or on the contrary, the second one, as you said, if you already have an owner occupier, start building at least 1 or 2 properties so that your loan can be paid off from those investment properties using the equity from those 2 properties. Yeah,
it's a good strategy. Look, a lot of people, I think a lot of people separate, they put money in a savings account, or they invest in shares or a managed fund or superannuation.
Yeah.
But then property is like on a different level for a lot of people, and they sort of think, okay, well, property, if I invest in property, that's a whole different ballgame. But it really is the same strategies of normal investing, usually with a lot higher leverage, because we can leverage property in Australia pretty easily. but it's just an investment tool. So whatever your goal is in the future for investment, if you want to make money, if you want to earn money, if you want to pay off debt, property is just like any other investment tool, is another strategy that a lot of people maybe miss, I think,
Right.
when you're talking
And
about things.
apart from leverage, which is very important thing, apart from leverage, I feel like property is one of the low risk tool, which actually is
Sorry, one of
earning.
the
It's a low risk
low
tool
risk. Oh,
for
absolutely, yeah.
making money, and it's going to build wealth for you over the period of time. Obviously, it's a long-term game. It's not a short-term. Like you can flip, but you'll make good money when you keep it for at least, like for me, property short-term is 5 years.
Yep.
Not less than that. And I've seen people making 20 to 25% capital growth in 1 year if you buy in high growth areas. So which definitely can't be beat by your shares or any other like market which you're investing in. Yeah.
I think a lot of people, I get a lot of inquiries from people wanting to property flip. It seems to be maybe a bit of a trend, but you're 100% right. Is that over a period of, let's say, 15 years, there's going to be so much growth in that property. And property flipping is really sort of an 18 months or 2 year sort of strategy. But also what a lot of people don't understand is that investing in property, sort of buying to hold, it is a passive sort of investment where you can you can purchase a property and just sit on it. Yes, there's a bit of cost involved. Flipping property is a job. Like that's producing income. That's not sort of producing assets. That's giving you income, and it can drain a lot of your resources and a lot of your time and energy. And if you can do it, it rewards heaps. Like you get paid well when you flip a property, especially when it's got a good heap of growth there. But property flipping's not for everyone. A lot of us work full time, and we don't have maybe the resources to sort of property flip on the side. And there's sort of a lifestyle element to it, right?
That's right.
I know people move into a property, you sort of fixer-uppers, and they're fixing it up for 5 years because their idea is to fix it up over 6 months, but things happen, families dynamics change, work changes, and then they're still, after 5 years later, they're still fixing up this property. So it takes a lot of energy, whereas sort of property buying to hold is a sort of a passive, it suits a lot of people, that type of strategy.
We're busy in our own world, I would say. So buying something which run on its own is a better approach for me rather than if you can flip around, if you, as you said, if it's a full-time thing, if you can do it, if you're passionate about it, why not? Yes, it will run the show for you as on from the ongoing income. But if you want to make passive income, definitely keep it, hold it. That makes more sense to me.
No, fantastic. Look, that's a great introduction for what you do, and I've spoken to you before, Tarun, and I know that you prioritize and you always think in the best interest of your customers, and they're really the goal. And I do want to talk about some of those first-time buyer changes, but one other question that I'll ask you, and I ask this to a lot of buyers agents, is that buyers agent really is, by and large, a unregulated industry. There's property advisors left, right, and center who are giving advice and strategies and all these types of things. How is someone to determine which property advisor or investment specialist is the best to speak to? I have heard a few things where people say, okay, well, if they've done it, they've got 10 investment properties, great, they're the person to speak to. I found that that's not necessarily true. And sometimes, I've got some clients with a few investment properties, and sort of they don't necessarily have a strategy other than to buy the next one, type of thing. So how would you determine, or how would you help a customer understand that a particular service is going to be better for them, or a particular buyer's agency, or a particular property investment agency, or something like that is going to be good for them?
Okay, to start with, I would say look for something that they are talking in your best interest when it comes to the numbers. When I say best interest strategies, as I said just before as well, that you need to understand that are they giving you the solution based on your situation, or are they giving you the solution just copy paste kind of a thing?
Yeah.
If that's the first one is a case, yes, they're talking in your interest. A buyer agent has to be transparent and honest when it comes to the locations they are targeting. And when I say transparent honest, they should be providing you the profiling report, suburb report, for example, talking about days on market, vacancy rate. When it comes to the property, are they going with the due diligence of checking with the flood zoning, bushfire zoning, biodiversity or heritage, or any kind of easement in the property? So all those numbers and all those pointers needs to be checked before you go and jump into the property. You can always ask for sample reports if the buyer agent is not comfortable doing it before you onboard as a client.
Yep.
It's always better to ask them, do you have any previous property which you bought for a client? Oh, there you go. Yeah, that can be a good point. And why did you bought that for them? Maybe then they will show you the
Good
days on
question.
market,
Yeah.
or maybe a vacancy rate pointer,
Yeah.
or maybe something like I anticipated 6% growth, but it has gone 15%. There you go. So
You have I think you also have a vibe, like you mentioned, like they're great questions actually. Like I never actually thought about asking, show us what you've done previously. I think a lot of people do some research and they look at reviews and stuff like this, but to ask directly to the person, hey, like I'm spending a lot of money for your service.
Right.
Show us what you've done. Give us some evidence that what you're doing is good.
I've got a client, and she's a repeat client now.
Yeah.
So even though she's a repeat client, I love the way she always approach to me with the questions. She this time she is buying under a SMSF, and she asked me this, justify why not this location, why that location for me for SMSF. And I was like, yes, I can do that. So that's the kind of questions I love answering, because when you challenge your buyer's agent and they will be able to justify with the reports and data and numbers, I think there you go. That's the time you should trust them and start with the next process.
We have the same issue in the finance world, and you understand this, is that people sort of say, they'll go to a mortgage broker and they'll say, or a banker, and they'll say, I need you to find me a great loan, right?
Yeah.
And then you provide, you take in all their situation, you discuss what their goals are, you discuss their financial situation, and you go, okay, well, here is an option for you that I think suitable for you, right? And the client goes, oh, okay. And then they take that and then they go away with it and they don't ask any questions. And as they go away with it, they start doubting. And is that the best one? I saw another one advertised and a lower interest rate, or I saw, I bank with this one. And they start to have sort of these doubts creep in, which is 100% part of the process. You have to have doubts. You have to have questions. But the issue that I find is that then they're not asking those questions to the person they've engaged. So they're not going back to the mortgage broker saying, hey, I sat on this. I've got a flurry of questions. Can I ask these to you? And can you help, maybe like your customer, can you justify why this product is better than this product? Or why this one, when I saw this interest rate is lower, explain that to me and justify why your recommendation is one we should go with. And you'll find that the buyer's agent or the broker or whoever you're using should sit there and say, hey, look, fantastic, here's the justification. So I do think that if you are engaging professionals, and I do this myself, when you're engaging professionals, accountant, buyer's agent, mortgage broker, whoever it is, you need to ask them your doubts. You need to ask them your questions. Because if you go away, it'll just fester, it'll make you doubt, and you'll have a bad experience. But the chances are that professional has an answer for you, but you just didn't ask. You know what I mean? And I love that. I love that your client, asked the question. And I think when you go to a buyer's agent, it's really good not to just sort of say, okay, that's his recommendation. Maybe let me just grab a second opinion, or maybe let me do my own research or something like this. That's all good. But if you have questions, or if you've done research and you've got questions from that, go back and get his thoughts on it. You know what I mean? Or her thoughts on it.
Yeah.
No, cool. So maybe that was a bit of a rant. I think
No.
I get that a lot. When clients don't ask questions, and I'm sort of like,
Oh
please
yeah.
ask them, because if you
That's
don't, then
when it
I can't
bothers you,
help.
right?
Yeah, I don't know what's concerning you. I only know what you've
Right.
told me. So
Yeah.
if you have a concern, bring it up, because that's going to create a lot more transparency.
Right.
Um,
And that's my favorite line when I close the strategy session. I always tell them, don't buy only because I'm saying it.
mhm,
Buy because I'm showing you the data. That
mhm.
makes more sense than anyone else.
Yeah,
So
yeah,
yeah, yeah,
100%, 100%.
right.
Yeah, that's true. And even though I just ranted, I wouldn't. I don't discourage research. I encourage
Oh yeah,
personal
absolutely.
research.
Sure. Yeah.
It's just I do discourage not asking questions.
Yeah,
That's
yeah.
what
We
I.
need to
Yeah,
educate our clients. That's when they will come
yeah.
up with further questions, and that makes them more confident working along.
100%, 100%. No, I love that. Now, let's talk about the sort of the elephant in the room. Not really the elephant in the room, but it's the big announcement, 1st of October.
Oh yeah.
Tarun, what's happening? What's happening on the 1st of October?
Yeah, so we are approaching 1st of October, and the government has pulled forward the first home scheme, which has removed the income caps, and I would say increased the cap for buying your home, which was
Mhm.
different in different states. For example, in
Yep.
New South Wales, it's going to be 1.5 million as a for a first home buyer to buy their home with 5% deposit and no
Mhm.
LMI, with the
Yeah.
housing
Yeah.
guarantee coming in place. So yeah, it's absolutely, I would say, a good opportunity for the first home buyers who want to enter the market, not just in New South Wales. In Melbourne, I think it's 950,000 cap going on now, and in Queensland, I think it's 1 million. So
Yeah.
pretty good
It's
time, I
really
would say.
good. It's really
Yeah.
good because there was issues where people are qualifying, or what they would qualify for the first time guarantee scheme,
Mm.
which, by the way, it's been around for a few years. It's
Yeah.
funny. I think there's been a lot of media hype about, this new scheme, but really it's an adjustment. It's not a new scheme. It's just an
Exactly.
adjustment
Yeah.
to an existing
Right.
scheme.
Yeah.
But we've got a lot of clients who are first time buyers, really trying to get into the market, and the property price cap was just too low. Like
Yeah. Yeah.
they
And they
couldn't
don't
find a
want to buy
property.
a property type, particularly like maybe it was 800,000, for example, in state, and they don't want to buy a unit because that state has only good options when it comes to as houses, which is touching over 1 million.
Yeah,
Yeah,
that's
taking
right.
an example of New South Wales, yeah, that's the best thing. People here in Northwest and Southwest region in metro cities in New South Wales, they don't want to buy a unit. They want to buy at least a townhouse or a standalone or freestanding house.
They want
They want to
land.
be able, yeah.
Yeah,
So yeah, at that time it was very difficult, but now I think it's a good opportunity for them to enter the market.
I think
As I
so.
think,
I
yeah,
think
yeah,
so. And I
and
think
5% is like what for a 1.5 million as well. It's just 75,000, and you are in the
that
market.
75,000, yeah,
Yeah, yeah,
it's crazy. $75,000 to buy a $1.5 million property. Not considering stamp duty, you probably have to put stamp duty on top of
yeah,
that.
yeah,
The federal government has increased their price caps, or the state government
yeah.
has still yet to sort of move those or adjust those.
Right.
But yeah, look, if you told me a few years ago, $75,000, or we'll get you a $1.5 million property, I would have laughed at you.
Oh yeah,
That's crazy. But now you can get into the market, and a lot of people who are renting, which is one of the biggest barriers to saving, to
yeah,
saving a deposit, is that you're renting. It's almost like this cruel game that we play where we're
yeah,
trying to save up a deposit, um, and we have to spend $800 a week for our house that we're living in, and there's no way that we could save up money on the side to sort of cover that. Now, $75,000 for a lot of people, that's going to sound like a great opportunity. For some, it's still going to be that struggle. You know what I mean?
yeah,
75 is not, is a lot of money for a lot of people. And so there is still sort of that push and shove, but unfortunately, the banks at the moment still have a particular risk appetite, and they only want to go up to 95% of a property.
Right.
And sort of that's how it works. But I wanted to ask you, there's been some maybe bad sentiment about this scheme and in the media as well. So it hasn't all been positive. There are some sort of concerns that people have. Have you seen some of that?
Yeah, I would say yes, it can be a concern or a trade-off from that scheme is that the price is going to be skyrocketing really high. So whosoever is not able to enter the market now or maybe next 6 months, they'll be like, oh, I've realized that last October it was this, and down the line in April next year, they'll be like, oh, now the same has bumped up to like 10, 15%.
Yeah. So then your savings needs to be here, and
it's more like a rat race. Yet like a race condition, you're always following that. But on the other side, on the pro side, the pros of that scheme, which I always love about it when I heard about like in the last 2 weeks, there are a lot of people who I meet and they're like, I'm happy to pay the mortgage repayments, but I don't have a deposit. So this scheme actually helps them come enter the market and buy something, like even if it's $1 million house, you just need a 50,000. On the contrary, you were actually looking for 200K to save. So it's a 150,000 deposit which you have covered up because of the scheme, and you can enter the market now. So and you can easily pay because your ongoing expenses are not that much. It's just that the saving doesn't allow you to save that 150 in this today time. I
always tell my clients, you can earn $1 million a year, and you want to buy a $600,000 property, but without a deposit, or without equity or without something, the bank is not going to give you 100% loan, right? The bank doesn't like that risk. They risk it on a percentage of the property value, right? So it doesn't matter how much income you have, you still need a deposit. And that's where a lot of people have been sort of struggling, is that they might have the cash flow, they can afford a loan, they can afford the rent that they're paying, but they just haven't had the opportunity to get into the market. And so what you're basically saying, it's a trade-off. So yes, property prices may increase, but it's a trade-off because we're allowing sort of some first-home buyers who couldn't access a property to live in access now. I did see it was sort of this satirical reel on social media, and it was and it had this this young first-home buyer going to an auction, and she sort of scrimped and saved, and she finally got enough to go to this auction. And she goes to this auction, and then they announce the government changes to the scheme, which is getting rid of like the income caps. And all these like really wealthy first-time buyers who've got a lot of money sort of come in, and then she isn't able to buy the property because they pushed the price up at the auction. So I think there's a little bit of that sentiment going around in the industry at the moment, where you sort of like, it's giving people access, but at the same time, property prices are going to go up. And I think we're going to see a little bit of a frenzy probably in the first 6 months, because I think people know this, right? They know property prices will go up, and so they're like, well, if I'm going to do it,
enter the market,
do it now. Like I have to enter it now. And so that's sort of what's probably going to create an issue. Maybe even a bit of a false economy, because it might actually increase property prices above what their actual value is, because it's just created this big rush into the market. And this is all speculative. I don't know. We'll see what happens. I think it'll be fun to watch.
You're right in that. I've got 3 inquiries recently, and all of them came to me like, oh, I've got my pre-approval. And I was like, okay, because you told us that the first home scheme is coming. So I thought maybe I'll just get the pre-approval done so that I can enter the market now away when 1st October hits. So I was like, okay, so that is happening on ground. I could see that happening.
Yeah, absolutely. And we're seeing it as well. We're seeing a lot of first home buyers. It's funny, we're seeing both. We're seeing parents of first home buyers who are like, can you help my children out? And then we're seeing,
Yeah.
and
Yeah.
everyone's sort of, it's like a race where everyone's on the line and there's, you
Right.
know,
Right. Yeah.
you're just waiting for the gun to fire, which is probably going to be the 1st of October. So
Yeah.
now I want to go back to your business in
Mhm.
relation to this scheme.
Yeah.
So buyer's agency is generally considered a product or a service, sorry, for investors.
Right. Yes.
And investors who don't have maybe a time poor or maybe don't have the expertise or the know-how to sort of find their own property, they use a buyer's agent, find the property for them, do the
Right.
research for them.
Yeah.
With first home buyers, it's not a numbers game. It's about comfort. How
Yeah.
close are you to work? How close are you to school and family?
Yeah.
You know, is this got the right facade that I want, the right backyard that I want? For an investor, that probably doesn't matter too much. They just, as
Right.
long as the numbers are all making sense.
That's right.
So, how do you approach first home buyers differently to investors?
Oh, so I differentiate with first home buyers that it's all about emotions versus when it comes to investment property, it's all about your business or numbers. Um, Numbers, yes, should be there in first home buyer as well because they are in the market for the very first time. They're tight on their budget, everything. But when it comes to first home, it is not just the numbers we look at because the the lady doesn't want to compromise on her kitchen. The husband
Yeah,
doesn't want to compromise on the like the living area or the TV or the sound bar system which he planned to put in when they buy the first home, kind of a
yeah,
thing. So all those emotions, and that kids doesn't want to compromise on their room as well. So all these things comes into picture. So my experience from past, I would say 1 year since I started my own business, I've been helping on an average one first home buyer every month. And I could see
okay.
that, yeah, there is a different checklist when it comes to
Mhm.
first home buyers or helping them with respect to investment properties. For example, I always ask them what kind of facade you're looking for, or what kind
Mhm.
of kitchen space you're looking for, how many people are going to stay in this house, and do you have guests frequently coming in? Do you have any parents coming from overseas who doesn't want to climb stairs and then go upstairs? And so all
Yeah.
those things comes into picture. And obviously school, because they have kids or they don't have kids, based on that,
Mhm.
school is really important for them. A shopping center nearby, how time poor they are, or um, how I would say how much time do they take to go to work, depending
Yeah.
on do they go on a daily
Public
basis or do they work
transport.
from home? So
Yeah.
public transport is equally important. All those things comes into picture when it comes to the first home thing. And as I said, it's
It sounds
altogether.
trickier. It sounds like a
It is.
trickier
It is.
thing
It
to,
is. It
because
is
you're working
actually
with
not very.
numbers are easy. When you're working with
Exactly.
emotions, it's
There you
hard.
go. Yeah. So investment property is typically easy, and first home, especially the owner occupier, not just first home, but owner occupier is quite a game.
Hmm.
And
Yeah.
and
Okay.
being a first home buyer once back in 2019 myself, I could say that yeah, I have got that experience. So each and every detail comes to you because you want to have that corner where you want to read the books, have that emotions in your home, and you
Yeah.
don't want to leave that home for next 5 years at least. Yeah. So you have to
Yeah.
plan
Yeah.
it accordingly so that you don't regret that I must have done this like it was just a matter of 5-10K. Maybe I've skipped that and bought that one
Yeah.
home, which I liked it. So all those numbers, all those emotions, all those pointers comes into picture when you are going for owner occupier.
It's hard. It's hard.
Yeah, it
And look,
is. It
it's
is.
what's funny too is that everyone, when they buy an owner occupied property, they think it's going to be their forever home. And I can't tell you how many times I've helped someone buy their forever home and then 5 years later buy their second forever home
Yeah.
because they sold the first one. And so
Yeah.
like
Yeah.
things change. And I think I think there also needs to be a little bit of reality when because there's a lot of emotions when you're buying your first home.
Yeah.
But and it's hard to ignore, but I think people need to also understand that as long as the home is also serving the purpose, like work and
Right.
school and stuff like
Yeah.
this, if it's ticking all those boxes, you don't need to necessarily worry about all the fringes and everything else because
Right.
the chances are you're probably not going to be in that property,
Yeah.
in the next 10 years. The kids are going to grow up and all of a sudden you think, this doesn't have enough room. They're great with toddlers, but now they're teenagers. I need a
Right.
bigger house, you know.
Yeah.
And so it upgrades. But that is interesting that it does change. So the buyers agents are still very, very effective when it comes to purchasing an owner occupied property too.
Absolutely. Yeah.
I
And
think not enough
especially
people
with
know that.
people, especially with people who are new to the country, who have
Mm-hmm.
migrated and they're buying their first home, they prefer
True.
buying their
Yep.
owner-occupied home first, not an investment property. It's
Yep.
very important for us to educate them. I recently came across a person and he moved from Singapore, and he was like, "Why don't I buy a unit near to a train station?" I was like, "No, because it won't grow on the capital side." And he was like, "I don't care." I was like, you will care in next 1 year when you understand that property
Yeah.
portfolio is something which you want to build for yourself, for your family, for your
Yeah.
future. And that's when I started educating him. So people like him, we need to educate them and tell them that, look, this is more
Yeah.
important for
And
you.
look, I don't know the Singaporean property market, but you can understand people that come from other countries, the culture, like the property market and
Yeah,
the culture surrounding that in that country might be different, and the
quite
market
different.
might do
Yeah,
different things in their country
yeah,
versus in Australia. So it's really good to sort of come here, um, even if it's your first home, to really engage a buyer's agent. Which actually brings me to my next point that I want to make, and
mhm,
I'm a massive advocate for this, and I think people, even though there's a lot of emotions attached to your first home, it's not necessarily a mathematical, equation like maybe an investment property would be. It's more of just on the feels and is it going to be the best for my family and our situation?
yeah, yeah,
But I always argue, or I always tell my clients, it's still an investment. Like over a period of time, that property will grow in value. You're sort of got to pay that property down in principal and interest payments.
yeah,
Likely, as you're an occupied property, you're going to build equity. That equity
yeah.
then can be used. What does that look like for? Maybe you can go through maybe even some of your clients or what you've seen as well. How can your first home also double as an investment? How can we use it to invest?
So look, even for your first home, your owner-occupied home, always look for something which is going to capitally grow, as you said, that the first focus would be the property type. Um, I'm not an advocate of buying a unit, only if it is like sea facing and it's at a beautiful location
Yeah.
overlooking the
Or
mountains and sea. That's
Airbnb
when,
for
yeah, kind of
something.
a
Yeah.
short-term rental thing. Only then I'll go with that. Otherwise, I never advise my client to buy a unit kind of thing. So property type is one of,
Can I ask why?
sure.
Yeah, why would you?
Because capital growth wise, units, 80% of units in the locations doesn't grow at that particular pace.
Mhm.
Comparatively, when you can buy a little over from your budget, you can buy a townhouse or a house in that
Yeah.
particular area. So it all depends on location to location. I'm not just saying that it's a general rule. I'm saying in particular, if it's a location which you can see that on the numbers that capital wise, a house or a townhouse is performing well comparative to unit. And I provide that kind of data to them that they should be feeling confident that, yeah, all what I'm talking and discussing with them does make sense to them as well.
Yeah.
So that's one thing, property type. You need to look for that. Second thing is obviously infrastructure and amenities. Third is the past growth of that location. Sometimes it happens that the client actually challenges us that, oh, this particular location has not grown in last few years, 5 years, 7 years down the line. Why are you suggesting me to buy now? That's when the property growth cycle has entered. That's the reason I'm telling you now to buy. For example, 3 years or 3.5 years down the line before, Perth was not performing well
Mhm.
and it has started picking up. So it was very hard for me to convince the clients that, yeah, you should buy at that location. Um, Early this year, same goes for Melbourne. People were not
Mhm.
convinced, but now they are like, I would say they are still not 100%, but they are at a mark that, yeah, 70%. Okay, maybe we could see that traction coming in from the prices point of view. Um,
I think Melbourne
my
also. I
feeling
think
is,
laws
my feeling is
sometimes
like
make it
next
hard.
year, it'll be like 100% thing, or just like it's like a no-brainer, just buy in Melbourne kind of
I
a thing.
know.
So
Well, it's like
all
that's what
those
it's been
don't
in
try
like
to.
Gold Coast for the last sort of five,
There
six
you go.
years. Is
Yeah,
that
yeah,
everyone's like, want to buy Gold Coast, want to buy,
yeah,
South Brisbane or something like that, and
yeah,
it's just been
yeah.
the big. That was almost like everyone's default investment was, oh, we'll have to buy in Brisbane.
Yeah.
But I think people are becoming a little bit more. Um, they're branching out a little bit as sort of Brisbane. Well, a lot of Brisbane's getting sort of priced out as well. It's getting quite expensive in certain
It's
areas.
going crazy. Yeah.
A lot of people are looking at other places, and Melbourne is something that I've noticed has come up quite a lot. Um, but yeah, I think they do have some tricky laws and tax laws and
When
stuff
it
like
comes
this
to land
in
taxing,
Melbourne,
yeah.
which
And even the rental returns at this point is a bit challenging.
yeah,
But I always ask this to myself that what other option are the best option for them if they're buying in that budget. For
mhm.
example, if it is 650 as a budget for them, what options they have in metro cities. Even the regional Queensland towns, they have gone above 600, 650 at this point of time.
I think there's a lot of noise in the industry about certain things too, that confuse a lot of investors. Like for instance, um, sort of like land tax in certain states, especially if
Yeah.
you're posting in a trust or something like this.
All right. Yeah.
You can pay sort of land tax on certain values, and people sort of hear that the property that they might be buying, you might have to pay some land tax on, and
Right.
despite the numbers completely working in their favor, it being a great property, good potential for growth, good rental returns. They sort of go, oh, but I have to pay land tax. Never mind, I'll just disregard that. And you sort of go, no, wait, wait, hold up, that's still a good property. Yeah, like
Yeah.
just because you have to pay some land tax, if the numbers are still working out, it's still
Yeah.
a good purchase. And
Right.
the same thing happens with selling investments, and where people sort of say, well, I don't want to sell the investment because of like capital gains or something like this. And you go, but if it's going to work in your best interest, if it's a part of a bigger plan to sort of build
Go
wealth,
for it.
don't worry about the capital gains. You'll
Yeah.
make that back. You'll work that out. But
For sure.
yeah,
Yeah.
it's
Yeah.
I find that people sort of hear sort of all these buzzwords and sort
And
of go, oh,
it's just not about telling them that it's still a worth. I actually show them in numbers as well that this property,
yeah,
particularly, that's the land tax, that's the ongoing land tax for you if in next 10 years. Consider if we are worst case scenario looking at the capital growth of 7%, this is how it will grow.
yeah,
And does it make more sense now because I've presented the number? And that's when people or the clients are actually happy to go because now it's more like a confidence that comes in because of the numbers.
yeah, yeah.
That's more important. Yeah, yeah.
Now, I know everyone's situation's different, but is there a point where someone should stop buying property?
Someone should what?
Should stop buying property.
Stop buying
So
property. Okay.
let's say they're on their third, and they could probably buy a fourth. At what point would you advise someone to maybe slow down and sort of say, hey, hold up, let's sit on this, or would you not? Would you say, hey, if you got borrowing capacity, go, let's get another one? What's your
Yeah,
opinion on that?
that's a rule of thumb. Usually, yeah, if you have the borrowing capacity,
You
go.
got the
But
borrowing
I would
capacity,
like
go.
to understand as well that what's your situation, why, and that's not just with the third property. In a general scenario as well. Whenever I stump into the discovery call with my clients
Mhm.
or discovery session, I always ask them, what make you decide that you want to buy a property? Yes, it's
Yeah,
not just the fourth one, even for the first one as well. I asked this question that why a property? Why don't you invest in shares or equity market or put it in your super just to save taxes if it's the case? And that's when people have their own reasons. Sometimes they say that, yeah, I still want to save on taxes because the last three properties I've bought, they are not helping with the building depreciation. So I'm paying a good amount of tax. This
Mhm.
time I want to buy something, a younger property, and I still want to save on taxes. Although I'm negatively geared, but now I want to make that thing as a tax return coming into my way in the financial year.
Yeah,
So yeah, so depending on situation, I would say it's not just one rule applies to all. There can be a situation I would advise them don't buy it or buy something which is increasing your cash flow rather
Mhm.
than just the capital growth. There can be a situation that they are highly negatively geared and because the rental returns are not that good, maybe a fourth one can help them buy like a dual key, which is going to increase their cash flow.
Yeah.
Or maybe something like now that your serviceability allows, but I would say you're too much negative.
Now, when you're buying a first home, you've got two options. You buy own occupied property, or you can be a first home buyer. Well, not a first home buyer, be first property buyer, I guess.
Right.
And you can purchase an investment property.
Yeah.
Now, this scheme that comes out on the 1st of October is only for own occupied
Yeah.
properties, which means that you have to live in it, I think it's 12 months, right?
Yes.
At least,
Yeah.
in order to sort of benefit from it.
Yeah.
It's important to know as well, and I have to double check some of the fine print, but I believe that the scheme basically is only, there is some fine print on the scheme, which means that you can't change it to an investment while it's still under the scheme. And so just make sure you know exactly what's happening. A lot of people go, I'll get into the property market for 12 months, then I'll sort of move out. Just make sure you know what all the finer details are, especially your mortgage agreement with the bank and the guarantee agreement. However, it's a lot of people will have a deposit. Sydney's a great example. Let's say I've got $75,000. They can buy a $1.5 million property in theory, but their income is not enough to buy that $1.5 million property. I've always said to my clients that if you can afford to purchase a property, rather than sort of chasing that deposit or waiting for your income, and once your income's at a certain amount, property prices have already increased, so now you still can't afford it. Maybe look to get into the market in another avenue through investing. Do you have the same sort of idea?
For sure. And I've got recently 2 to 3 clients who have been into that situation, and they're like, just adding to that situation, they are like, I'm happy where I am as of now. It's just that it's a tenanted, like I'm renting it out. That's the only difference. So I was like, if you're happy, but you still want to enter the market, go for something which you can invest in rather than living for yourself, because this situation is like they want to live near to the school, and it's a selective school, so they can't live around that. Like they have to live around that area and not come out of it. So 100%, if you are not owning any of the properties, rather than buying it as a first home, buy it as a first property and enter the market so that you don't miss the boat of inflation or the property prices going high. Say next year or 2 years further down the line, if you make any equity out of that house, just pull it out. That will help you work as a deposit for your first home, maybe. And that can be your first owner occupied home. Maybe you won't be getting the 5% thing, but at least you won't miss out on the on the board that it's out of your reach.
That growth in those properties, it depends on how good you are at saving, but a lot of the times the growth in those properties will outpace someone putting away $100 a week type of thing. And I think I do know someone who had been investing in property their whole life, and they purchased maybe 5 investment properties over a period of maybe about 5 years, and after the 5th year, they purchased their own occupied property. So they actually started investing in properties all over Australia before they even ever purchased an owner-occupied property. But he says that if he saved up for that same 5-year period, instead of investing, he wouldn't have got the property that he's in now.
Yes, for sure.
He didn't have the deposit. He ended up selling a few of the investments so that he could have a deposit, and he wouldn't have been able to do it. And so if the first home guarantee scheme still isn't hitting the brief, and you still can't access the market with that, property investing is a great way. Yes, you might pay some lender's mortgage insurance. Granted, you have to pay stamp duty in whichever state you purchase in, but the idea is that those costs are made back through the growth and the income generated from the property.
Yeah, for sure. Yeah.
One thing I also wanted to mention too is that even though the scheme is for first home buyers, there is avenues, and you know about this, Tarun, as well. There are avenues for first time property investors to get into the market through a guarantee scheme. this guarantee is from the government, but there's a guarantee from from family members, or family guarantee, which is where your mum or your dad or brother or sister or someone in your sort of close direct family has a property and they're willing to help support you with their equity. And it pretty much it pretty much operates in exactly the same way as the government guarantee. It's just that it's not the government, it's someone, it's one of your family members. But that works for investment as well. So you can actually invest. You don't have. There's no property price cap. There's no income cap. There's no, any of that. It's you can buy whatever property as long as you've got the income to be able to afford the repayments on that loan. And so it's definitely worth considering. If you're not quite there with your deposit, you can get in with no deposit with a family guarantee. And then after 5 years, that would have generated a bit of equity. You would have paid it down. You would have released the guarantors, and ideally, and you'll have a deposit for your first home if that's the end goal.
No, definitely. And I feel like people are not aware, because of which they're not jumping in. But like obviously with this scheme or other, like talking to mortgage broker or buyer's agent, at least that education goes on to them. And just to add on, people always like a lot of my clients, they come to me like, oh, I've delayed doing this now. That's how I realize it, that I've delayed it to like I would have done it 2 years back. I always tell them, look, it's always the right time when you're ready. Maybe you're not ready at that time, or at least you have a lesson that it was an actual delay, but not just a delay from finances or any other situation wise. So
I guess I can't say how many times clients will also come to me and say, look, I can't afford a property. Like, I know, not I can't afford it. Sorry. They come to me and they say, the bank's not going to approve a loan for me. And I say, why? And they go, oh, because I'm a first time buyer and I probably don't earn enough income and stuff like this. And I go, well, let's have a look at it. And we have a look at it. And I say, yeah, you can borrow a property. And they go, oh, okay. Well, okay. In that case, maybe I will. And I always wondered to myself, how many Australians are in that position?
Oh, they've got,
they can buy a property now today, but they just tell themselves they can't. And it's probably media that's helping them think that way. You can't buy a property in Sydney, you can't buy a property, blah, blah, blah. And I'm sort of like, hey, if you can't buy a property in Sydney, buy a property somewhere cheaper. Invest first.
At least enter the market.
Enter the market. Start building wealth. It's the same thing with like superannuation, where people, my financial planner always tells me, make sure you keep putting money into your superannuation. That's his advice to me, at least. And he's like, start now, because in the future it's going to be worth a lot. And I think property is the same. It's like the same type of investment where you sort of go, well, if you can afford it now, and it's not going to put pressure on the budget, and you've got a good borrowing capacity, and you can manage it, then don't sit and wait. Just go buy the property. And it might not be on the North Shore looking over the beach. It might not be close to family and friends and the things that you like. It might be a small little townhouse, in some regional center that's got a good amount of income. And that's you starting. That's you starting out.
That's right. That's it. Yeah. And as a basic question, which one of my client asked me 2 weeks back, is it, Tarun, what will make me start thinking about buying a property? And I said this to him, that you need to talk to a mortgage broker. That's it. If they tell you or give you a heads up that you can borrow money from the bank, that's all we need. That's all we need to get it started. So it was like, oh, so I'll come to you only when my mortgage broker says so. Yes.
But that's good too, because I have, and I've made a video about this actually, and I spoke about it on another podcast, that I will do a borrowing capacity for someone, and this is where buyer's agents come in, because I'll do a borrowing capacity for someone, and it'll be $550,000, right? That's their purchase price.
Right.
And they'll throw their hands up in the air. well, don't worry about it then. We can't get anything. What do you expect us to get for that?
Yeah.
We'll keep saving. This is such a hard thing. Why do they make it so hard? Blah, 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 blah,
Yeah.
blah. And I sit there and I go, I have so many clients who are buying for 450,000. I have
Yeah.
clients who are buying for 550, getting 5+ rental yield,
Right.
and I understand from someone who's not in the industry, they might have that initial reaction of going 550. What am I going to get? I'm from Sydney, like that's crazy.
Yeah.
But
Because the
that's where
reason I
buyers
tell
agents
you,
come in.
yeah, the reason I tell you why they think that 550 can't buy them anything, because they have a focused on one location. And they're like,
Mm.
oh, I want to buy here, not anywhere else, because they're not aware of anything else
Yeah,
in the market or in across the states going on. And that's when I always tell my preferred partners, like mortgage broker accountants, is tell them to talk to me, and maybe I'll introduce them to the locations along with the numbers, that how
yeah,
well my clients' properties have been performing in the last so many years. So they can also enter into the market and buy
yeah.
something like that.
And they're only, to be honest, they're only thinking about buying in that area
Yeah, because they're
because
aware of that area,
their
or they're
friend purchased
knowledgeable.
there. Yeah,
Yeah,
that's
their
right.
friend
And
bought it. Yeah, all
that's
those things.
right. And
Yeah,
so they're like,
yeah,
well, then I want to buy in that area too. And they're missing out on the opportunity to invest in. A lot of them will prefer to sort of fold their arms and grumpily sit down on the couch instead of actually just going, well, just invest somewhere else, invest in another place. But again, that's where buyer's agents come in, because people don't know the other places.
yeah,
They don't know where to buy. And
yeah,
it's, when they hear these place names from family and friends, that's what they're familiar with. And they go, okay, well, that's where I want to buy. And if you start naming another random place, they go, they go, why would I go there? But if you run the numbers and it makes sense,
yeah.
then go. Like, let's get
Yeah.
into the market. Let's start your journey. Let's start your property journey.
I've
Yeah,
got a,
I see
I've got a client with the
that a
same
lot.
situation, and he was like, my friend bought it in Melbourne, in a suburb. I want to buy there only. And I asked him this question, that why your friend bought it? Is it his friend also further bought it there? And I was like, no. And maybe for him, somebody else have helped him, or maybe he did his own research. Yeah. So
Yeah,
you're buying it just because your friend bought it and you could see that growth in last 1 year.
yeah,
I'm letting you enter into a similar situation, but not in this suburb, because that suburb has grown now. So you
yeah,
might not
yeah,
take that advantage of like
yeah,
capital growth in next 1 year. I want you to buy where I feel, and the numbers obviously will be making more sense, and you can experience the same capital growth which your
yeah,
friend did. But I'm
yeah.
not going to go in that suburb and
I,
buy for you just
I
because you
think
said it.
I think people also see short-term growth and think that equates to long-term growth. And so they'll
Yeah.
see the last 12 months, it's, great. Oh, my friend bought 12 months ago and it's already X amount. I want to buy there. And you go, well, like, and the friend's I can imagine the friend turning up to the, barbecue, walking out into the bike, thinking he's the man.
Yeah.
And it was purely luck. A lot of this is just luck that in the
Yeah.
last 12 months it grew so much. Now, his property will probably grow over a 10-year period like most properties in Australia.
Right.
But that 12 months maybe was just luck. And so you shouldn't base your property investment decisions on someone's lucky 12-month
Yeah.
growth.
It's a big
Um,
amount.
yeah,
Yeah.
exactly.
Yeah.
But people want to see, as soon as they buy a property, they're looking at their valuation every second day. Oh, has it grown? Okay, it's gone up $5,000 today. Great, this is a good day. But
Yeah.
just hold. Your property will grow. Eventually, if you purchase,
Yeah.
in the right areas.
Right.
But even I always say this, like, if you're buying in sort of a capital city or a major area, history shows us that
Mm.
those areas will grow. You know what I
Yeah.
mean?
Yeah.
Like, if you're buying somewhere out, whoop, whoop, yeah, maybe that might change. If you're buying in some mining town, that's going to fluctuate with the industry. But if you're buying sort of within an hour of a capital city or something like that, or half an hour of a big regional center, then
Right.
the chances are that that's going to grow.
Oh,
Over
obviously,
the
because of the population,
yeah,
infrastructure, multiple industries, all those things
yeah,
comes into picture. Yeah.
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 It's also important to not to put all your money on the fact that a property will grow, because I think growth doesn't necessarily mean future growth either. So,
Yeah, definitely.
actually, that's a question I want to ask you.
Yeah.
We can't, unless we've got a crystal ball, and this is probably the last question I ask you because I'm aware of the time,
All good.
but we don't have a crystal ball, right? So, I always warn my clients. I say, if someone tells you, if you're speaking to someone who's trying to sell your property and they say this will grow 10% in the next 12 months, I always say, you don't know what's going to happen in the next 12
No.
months.
Yeah.
But as a buyer's agent, you would know, even though you don't know what's going to happen in the next 12 months or the next 10 years or 5 years or whatever, there are indicators that can help you make a decision that's going to be right. What are some of those indicators?
So, first and foremost is never buy when the growth cycle has completed. Like when the growth of a suburb or a council or a state comes in, technically 3 to 4 cycles. So when you are buying in a fourth cycle, not first, you're not going to expect that kind of percentage-wise growth. Maybe like it's a 12%, 10, 7, and 5. So you're buying it here, and because of the data which you could show in the 12% growth, and
It's going to
maybe
start tapering.
so it'll constantly go with a 5 for next 3, 4, or 5 years down the line. So you never know. So that's one of the point is that what reasons you could see further down the line, which you will help you to decide that, oh, it'll further go for like another 7 to 8% or 10%. That's one thing. Second is I never overcommit my clients that this will be the 10 or 12% growth. I always go with the average. When it's an average, it's like with Australia's capital average growth for houses or townhouses is something like 7%. So I always tell them, look, bare minimum worst case scenario, 7% is what you'll get, unless you have a natural calamity where everything will fall down. So nobody can do anything for that. But yeah, as a bare minimum, consider not more than 7%. Anything goes above, it's a good. And I am a firm believer of undercommitting and overdoing. So that's why I always tell them, don't just go with my words. Just consider the worst case scenario. Anything which goes above is for you, your benefit.
Yeah, it's expensive.
Yeah. So I've never seen my clients getting below 10% of growth where we have bought in last 1 year. So that gives them the confidence that, we are not buying wherein it's the peak of the price.
Yeah.
So, for example, when I built this house in 2019, I built it for 800,000, 400,000 for the land, 400 for the bill at that time, including everything, stamp duty. But COVID came in, popped up the prices, everything. Now, if somebody asks me, will you buy a similar kind of a land and build it, or maybe just buy a house here in the same area? Maybe not, because I have tapped in at a time where I've touched the growth and I've experienced the growth because of which I could build a property portfolio for myself and the family.
Yeah.
Now, if you're buying in 1.3, 1.4 billion for a similar kind of a house, you might not see that particular percentage-wise growth in next 5 years. You will definitely see, because population-wise, Sydney is growing fast.
It'll grow,
but percentage-wise, now that won't be reaching that quickly.
Yeah, okay. Well, it's good. Look, it's really, it's some good tips there. It's really good to know. But look, I think to sort of summarize, I think it's number one, you need to speak to a buyer's agent. Speak to a buyer's agent.
And it's an obligation-free discussion which has to happen, including the numbers. So my approach is very simple. I take the numbers before I onboard them. I take the numbers and discuss with them, particularly in their scenarios, so that it will be obligation-free for them to decide if they want to come on board or not.
Nice.
But okay. Numbers should be making more sense to them.
Yeah.
And then we do the strategies.
Rather than sort of this blind trust. Okay.
Yeah.
Have a consultation and pay a deposit, and then you're sort of like, bro, are we doing the right thing? But that's great. And then, of course, the first home buyer scheme. Don't know what's going to happen. I don't necessarily want to encourage people to rush into the market, but it'll be interesting to see what happens on the 1st of October. If you are a first-time buyer, it's probably a good idea to start sort of having a look at your budget and seeing if you can take advantage of the new scheme. And thirdly, you do not have to, you don't have to buy an owner-occupied property first. You can buy an investment property first. In fact, that's a pathway a lot of people take to get into their own occupied property eventually. And lastly, if you don't have a deposit, you can still do guarantee schemes. It's not government run. It could be sort of through family and friends. But look, Tarun, thanks so much for joining. us today, and I look forward to seeing what happens in the next 12 months. But I'll love to have you back on at another time. Maybe we can talk about what's happened after we've seen that.
Sure. Thanks, Peter.
Awesome. Thanks, mate. All right, take care.